all Sailors locations will be closed, effective immediately. The real estate will be transferred to a real estate investment trust controlled by Sanford Bensinger and me, where it will eventually be sold off at market value.
Spoiler alert! Well, not really, because we all pretty much knew what was going to happen in this episode. Because we talked about it in the last video that I did, which was all about Sears. If you haven't seen it, I'll link to it right above here. And like we were talking about, Axe went in and blew everything up. So this story about Sailors has pretty much exactly followed the story about Sears. So if you remember, Eddie Lampert, who we talked about in the last video, this guy is the hedge fund guy who Axe pretty much represents. And what did Axe do in this last scene? He spun off some stuff and he created a REIT. Well, Lampert, like I was telling you in the last video, he's the guy who was running Sears, right? But he was getting sued by Sears and his creditors because they thought that he unduly benefited from doing things like spinning off Land's End and creating Seritage Growth Properties, which was a REIT that was made out of Sears property. Basically the exact same thing Axe is doing here. So in this video, we're going to look at this example of this REIT spinoff and how it played out. But first, I want to know what you thought about this finale and really this season in general. So comment down below on your thoughts about this finale, the season, and what you think is going to happen in season 5. So for me, I think the best part about this season and this specific episode was the acting, because there are some great actors on this show. First of all, that scene with Chuck speaking Italian. That was probably the best scene of the finale. Paul Giamatti is just such a good actor, because the other best scene of this season, I think, was his BDSM speech when he came out about it. Like, he's one of those actors that you could just listen to talk about anything. He just has that voice. I mean, he really should be narrating like every audiobook for everybody. And the other great acting moment in this finale I thought was Axe. Damian Lewis. His face when Rebecca Cantu walked into the meeting. It just said it all with his eyes and everything. You got a bunch of emotions and you understood the whole situation just from his glance. That's good acting. And that's why they're the two leads in the show, right? They're the best actors. The worst part about this episode and season is, of course, Taylor. I was really hoping that they'd be gone by the end of this season, but nope. Taylor does that whole robot rally for their troops, making them all excited that they were going to be focused on the markets again instead of Axe. More importantly, Taylor Mason Capital is back. And then, of course, by the end of the episode, they're bringing their entire team under Axe Capital once again. So we get to see another season of Taylor trying to portray human feelings. This is a great meme from Reddit. Sad, happy, angry, annoyed, furious. Oh god, I can't stand this character anymore. Just play it out, needs to go. I do like their girlfriend though, that's an interesting character. Even though this thing Billions posted makes it look like Taylor is making out with Stannis and Melisandre's shadow assassin baby. Someone really should have caught how bad this is. I don't know how this got through. But yeah, we gotta keep suffering with Taylor. Also, the other thing that didn't make sense about the finale was Axe and Chuck going back at each other. I didn't think there was enough buildup for that to happen. Like, it happened in just 2 lines. All of a sudden they're like, yeah, I don't like that guy anymore. Really, how it should have happened is it should have built up over the first half of the next season or something, where they really start hating each other again. Like, say they could start fighting over Wendy, which is kind of something old but something new at the same time, because Wendy and Chuck's relationship is pretty much completely gone. So that's a good point of contention to bring back the old feud. But there was no buildup, so that ending really didn't make sense to me. Unless the writers are being sneaky. So that whole thing where we saw Taylor and Chuck team up against Axe, that might be all a ploy. That might have been the big Axe-Chuck plan. To get Taylor to trust Chuck, get Taylor back under Axe's wing, and then screw them over. So Axe and Chuck might still be on the same side. And you know, the writers pulled that same long con with Connerty this season. Poor guy was getting played left and right. All that Dr. Gus training just didn't help. Now I hope this show ends with everyone destroying each other. I want everyone to lose. Axe, Chuck, and every person who works with them. That would be the most deserving and poetic ending. So Taylor kind of already foreshadowed it when they were talking about how Axe and Chuck are pointed at each other already, ready to fire, and Taylor's planning to step out of the way and let them do that and destroy each other. But the problem is you can't step out of the way when 2 people are about to fire nukes at each other, like Chuck and Axe would, because when that happens, everyone is going down. A lot of collateral damage, including Taylor. That's naive for them to think they could step out of the way. So I think my preference would be that they wrap up this show in 2 more seasons. Taylor goes down by themselves in season 5, and then you get the build-up between Axe and Chuck, and they finish it off in season 6. But of course, you never stop making a show if it's popular and profitable, unless you're Seinfeld. So there's always this risk of this show just getting dragged out further and further, to the point where it actually goes bad. Now, I hope that doesn't happen, but that might happen. We'll have to wait and see. But anyway, I would love to hear your thoughts about this season and the finale down below. Make sure you comment. I read all of them. But now let's talk about REITs, real estate investment trusts. So what a REIT is basically a commercial real estate portfolio that individual investors can buy shares in. So it's almost like you're buying an ETF, but instead of that ETF combining a bunch of stocks, the REIT combines a bunch of different investment properties. And whatever company's REIT that is, they're the one managing those properties. So the REIT leases space and collects rent on those properties, and then it distributes that income as dividends to its shareholders, which would be you if you bought the REIT. So REITs are basically just another financial product that's supposed to make it easier for investors to get involved in real estate. Now there's a few benefits and drawbacks of REITs, the biggest benefit being their liquidity. So what's the main problem with real estate? It's that once you buy a property, your money is tied up in it. It's not as liquid. It takes time to buy and sell, and you're locked in for a period of time. Versus stocks, where you can buy and sell within 10 seconds, right? So the benefit with REITs is that you can get exposure to real estate, but through a vehicle that trades like a stock. So there's less risk in that sense. The other benefit is that you get that diversification, because this is giving you an easy way to access the real estate market as opposed to going and buying your own property and trying to manage it. REITs are transparent, they give you those steady dividends, and a lot of people use REITs for their dividends. They're big in dividend investing because that's kind of the REIT's job, right? To collect the rent and pay it out to you. And that's why a lot of people buy real estate too, because they like that steady income from rents. REITs aren't much of an appreciation play. Like, you're not trying to buy a REIT for $50 and hope it goes up to 100, as much as you are trying to buy it at 50, hope it stays around there but keeps kicking out that dividend. So it's more of an income strategy. Now, one of the problems with REITs is that they don't have that appreciation like I was talking about, because that's not really how they're structured to work. Also, you lose one of the huge benefits that come with real estate investing, which is all the tax advantages. Because if you're investing in a REIT, then it ends up being taxed like dividend income, and those taxes are higher than the taxes that you would pay on a real estate property. The tax advantages when it comes to real estate are really important, which you're not realizing if you trade it this way. But you get the liquidity also, so pros and cons. Of course, REITs do fluctuate in price, so they're subject to market risk, especially when the real estate market is taking a hit. And then it does have high management and transaction fees, because there is someone actually managing those physical properties. So that's the simple definition of real estate investment trust, which is what Axe spun Sailors into, at least its properties. And it's the same thing Eddie Lampert did to Sears. So in 2015, Sears sold about 235 stores to Seritage Growth Properties. So that Seritage Growth Properties is Eddie Lampert's REIT. So what Seritage would do is take those Sears spaces and then convert them into something that people actually want, like offices and restaurants and stuff like that. So you can see here that this is one of the areas that Heritage converted from Sears into REI and Bye Bye Baby. I don't think I've heard of that store. Oh, there's a World Market in there too. Now, Seritage didn't just get this for free. They injected $2.7 billion to get those properties. And Sears, because as you know from our last video, they were struggling, so they needed that money. And then it was great for Eddie because Seritage, while they were trying to convert the best locations into more profitable uses, they also owned all of Sears real estate. So Sears would pay them rent while those few stores were still in operation. Now, none of this is illegal, but the way it comes off, as you'll see later in the story, it looks like Eddie was just taking all this stuff to enrich himself and then just gutting the company. And that's exactly why pensioners and Sears shareholders put a lawsuit against him. Former chief executive of Sears in Canada said that this is a play to wring the last drop of value from Sears until there's nothing left, and it's working. So Eddie Lampert, just to review, with his hedge fund, he bought up Kmart's debt when Kmart went into bankruptcy, so he basically owned Kmart. Then with Kmart, he went and bought Sears. And that way he could combine the two struggling, failing, super giant stores. And people were excited in the beginning because they're like, oh, if anyone can turn it around, this guy can turn it around. But the smarter people knew that he was likely just doing it for its real estate and because he could spin off the profitable sectors. Basically, the hedge fund guy comes in, does some financial engineering, doesn't save the business, so all the people working in the business, all the store workers and everything, they get screwed, but he engineers it in a way that he makes out with a bunch of money. But Sears and Kmart never come back, they're dead. Not illegal, but people really don't like it. And it's funny because even Warren Buffett saw what Eddie Lampert was doing, and he lent Seritage $2 billion for its redevelopment projects. So if Buffett's in it, it kind of shows you that it's not a bad idea. It's going to be at least profitable. And meanwhile, while all this is happening, Sears is closing stores and laying off hundreds of workers. Now, people also get mad about this kind of strategy because it looks like a conflict of interest. So Lampert was the chairman of Sears and one of its largest shareholders, but he's also the chairman of Seritage, and he holds a significant stake there too. So the conflict of interest is him kind of gutting Sears to make his other company rich. And there's other people in on this too, like Steve Mnuchin, who is funny because AOC and Elizabeth Warren actually went after him about what he did with Sears. And if you remember, Eddie used to be his roommate at Yale, and Stephen is now Trump's Treasury Secretary. So it's a good point for his opposition to go after him with. Now, like I said, the deal that Sears did with Seritage actually generated good cash to pay down their debt. They needed it. But again, everyone was pissed because it didn't stabilize the retail business over the longer term. Sears continued to lose hundreds of millions of dollars a year and its sales declined, which everyone thought, Eddie was supposed to fix. But why would he fix that if he's just moving money around? If he's focused on the real estate end of it, who cares what the main company is doing? And some Sears shareholders have even questioned the price that Seritage paid for the properties. Again, conflict of interest, right? So a lawsuit filed by the shareholders said that the real estate broker that Sears hired to appraise the properties had failed to fully account for their value if they were converted into other uses. So Sears settled that lawsuit for $40 million last year. And who would have gotten that real estate broker other than Eddie himself? So maybe he could have gotten those properties cheaper than what they were actually worth because he runs Sears. So he's selling it to himself for cheaper, screwing over everyone but himself. And like I said before, Sears still pays Heritage money because now they're Sears Landlords. So in 2017, Sears paid Seritage $117 million in rent. And then Sears also covers a share of the insurance and property taxes on the stores that Seritage owns. So a Sears Canada executive put it well. He said they're keeping the patient on life support while Seritage withdraws rent money and lines up new tenants. There's something really wrong with this picture. And again, this isn't illegal, but it's not nice, but it is profitable. And I think it's the go-to strategy for a lot of failed retailers. So either hedge fund guys, private equity guys, they want to buy these up and then gut it and realize the value in the property. So another example of a failing retail chain where this was always an option is Gamestop. There's always buyout rumors for Gamestop. They think someone is going to buy it out. But then when they buy it out, are they going to keep it alive? Probably not, because one of the most valuable aspects of Gamestop, if you look at their balance sheet, is their real estate. It's their physical stores. So this is why this method of letting the company fail, not turning it around and just pulling out its assets, it's profitable and it's done over and over again. Is that good or bad? I don't know. You can decide. Let me know in the comments. It's capitalism. Was Sears ever really going to come back? I don't know. Is GameStop ever really going to come back? Who knows? And it's funny with this Sears story because you actually saw Warren Buffett invest in it. And you know who's supposed to represent Warren Buffett in billions? Sanford Bensinger, this guy. So his paper route story, the giving oath that he tried to make Axe take, I think that was Axe. And then at one point, Rebecca calls him the Oracle. All these things are kind of Buffett stories. So Sanford basically represents Buffett. They really stuck closely to the Sears story. And that was one of the things I was thinking about. Why would Sanford go along with Axe? He's not friends with Axe. He really doesn't like Axe. The person he liked in the deal the most was Rebecca and her vision for turning the store around, because he's all about, America and making it great and not letting foreign companies take over. Well, as it turned out in the end, he's all about the money. And it does kind of represent Buffett well, because Buffett is cutthroat too. I know Buffett looks like a friendly old grandpa, just drinking Coke and going to Dairy Queen. But there's all these stories about Berkshire raising rents for people who are already at poverty level in places like motorhome parks and stuff. Then there's stories about them getting involved in predatory lending. Just stuff you wouldn't expect from friendly old Buffett. So Sanford Bensinger kind of played that role well too. Let me know your thoughts about all this below. And if you want more Billions content, let me know too, because the season is over, so I was planning to stop making it. If you guys want it, I guess I'll make more. And if you haven't watched all the Billions breakdowns we've done this season and previous seasons, make sure you check out this playlist. You'll have access to all of them. There's a lot. Check them out. And don't forget to subscribe to this channel and hit that notification bell so you get an email notification when all our new videos come out. We do more than just Billions content. We talk about the stock market, we talk about business. It's all a lot of fun. So subscribe and I will see you in the next video. Stay fallible out there. Bye.